This is Backroads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Let's start with our conversation about the trade dilemma to China. This week in South Korea, they are talking about soybeans for China. Other hand, the ranchers is not happy with Argentina beef imported in the United States. We were talking about it for this week. This is Backroads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today for our program. I am Cesar Delgado on today. I have a conversation about the Mid-Atlantic coast with Ben Hushson from Whitehall, Maryland at the mill. And the cattle on feeds report is due to the government shutdown and the grains markets are uncertainty with China. We are watching for the beef demand from Argentina and also the bailout for Argentina. We were bringing it up with Greg Mcbride from Allendale Incorporated. You've been listening to Backroads of Illinois. Well, this growing season in the Midwest and the harvest season in the harvesting mode for right now. What about the Mid-Atlantic coast? How is the harvest season in Maryland? We were talking about it with Ben Hushson from Whitehall at the mill. Hey, Ben, how are you?
Hello, Cesar, and happy birthday. I'm doing very well, and harvest is moving along. We haven't had much rain, so harvest is about 50% done for corn and about 25% done for soybeans.
Thanks, Ben. Ben, let's discuss about the harvest season in the Mid-Atlantic coast. How is the harvest progress in Maryland?
I would say about 50% of the corn is harvested, and yields have been tremendous. There are areas that did not get planted on time because of how wet we were this spring, but overall, harvest is well above average.
You mentioned before starting with our conversation. It's good, but how about a wheat planting?
That's a very good question. Wheat in 2025, we harvest in July. We had great yields, but very poor quality. Therefore, there are farmers that still have wheat in their bin from July 2025 harvest. So there are less acres being planted in the Mid Atlantic.
Of course. Do you have any concerns about the prices for the grains markets, especially with these trade barriers again?
Yes, you always have concern about pricing because everything costs so much today, whether you're farming or whether you're in any other type of business. The inflation that began 5 years ago just doesn't want to slow down. And I'm hoping that some things get fixed up. I guess we're going through short term pain for long term gain, I hope.
Do you think about the impact of the Argentinian farmers with AIDS in Argentina, Ben?
Yes, I don't know that I have a good answer for that, but it certainly is another level of concern.
What about the fertilizer prices? Are you watching about the fertilizer space?
Yes, that is a significant portion of our business, and that's a significant part of the farmer's cost. So I watch fertilizer prices almost every day and certainly have concerns. Most of the fertilizer used in the Mid Atlantic is imported, at least on the nitrogen and phosphorus side. Of course, potassium, potash, a lot of that comes out of Canada, but technically also that is obviously an import too.
What cost of nitrogen for Maryland?
I think you said what is the cost? Right now, if someone's buying um, trailer loads of nitrogen, the cost is probably 68 cents per unit of nitrogen.
What is your final thoughts about the corn yield from this summer?
Surprisingly better than I expected. As I said, we're only about halfway through harvest, but in general, our yields are either the best ever or the second best ever. And I get concerned that the corn we have not harvested yet, in some cases, was planted in late May. And I feel like there's going to be a big tail off from that. But overall, it's been an exceptional yield year. Very concerned, lots of disease in the corn stalks. Some of these corn stalks are just waiting to fall over. So they definitely need harvested before we get a hurricane come through.
What is the range of the yield? Could you tell us about that?
Yes, I would say 230 to 270 is kind of, well, I'll say 200 to 270 seem to be the farm yields. There are spots in the field better than that and worse than that, but that seems to be what it's coming out.
Thanks, buddy. I enjoyed our conversation for today on Today.
I agree. Happy birthday. Thank you for the opportunity.
Ben Hushson from Whitehall, Maryland at the mill. The cattle on feeds report is due to the government shutdown and the grains markets are uncertainty with China. We are watching for the beef demand from Argentina and also the bailout for Argentina. We were bringing it up with Greg Mcbride from Allendale Incorporated. Hey, Greg, how are you with all of this?
Well, Caesar, it's been a wild ride. I think you look at what's happening with Argentina, and nobody here in the United States really can believe what we're doing as far as bailouts or even buying Argentine beef at this point. For my money, I don't think it necessarily fixes any issues when it comes to our own beef supply. And I mean, really, all you've done is upset the cattle producers with this sell-off we've seen.
This week in South Korea with China. What is your thoughts?
Yeah, I don't think we're going to get the deal that everybody is hoping that we're going to see. At least I think the way it's going to work is they're going to take the framework deal that they've got sorted out from this past weekend with Scott Bessent and or Secretary Bessent and his counterparts and U.S. Trade Representative Greer. And I think what they're going to do is they're going to say, well, this is a good start. This has cooled off some of the intense rhetoric that we had in the last couple of weeks about the changing of the port fees and the rare earths and increasing tariffs and all of that. But I think at the end of the day, what really happens is they're going to agree that they need to continue to work to kind of fill out the rest of that deal. And whether that means, specifics for purchases of U.S. ag products or just in general, everything, I think what they'll say is we're going to work for the next 30 to 90 days. And we'll work on getting this deal rounded out. And then after the first of the year, when the president has already said that he's going to go to Beijing to meet with President Xi in person again, I think that's when a deal actually gets done. So the excitement that we've seen in the bean market is a little concerning because it does kind of feel like we're being manipulated in a way. I'm not going to get mad at it because that is higher trade for our customers, for our farmers, but it's very dangerous to trade that way.
Mm-hmm. Right. Greg, let's start with our conversation about the grains markets for right now with China. What is your thoughts with today's trade barriers in South Korea?
So I think the problem that you run into right now is just you've got a lot of rhetoric going back and forth. We're meeting with the Japanese, we're meeting with the South Koreans, we're meeting with China this week, and a lot of what we're hearing is we've got a deal, we've got a deal, we've got a deal. Whether that's with South Korea, whether that's with Japan, whether we're working on a framework deal with China, or even go back and go back to the beginning of this whole trade war back in April and some of the subsequent deals that we've gotten, these all turn into kind of framework deals that we're putting the pieces together, but we really haven't signed anything, and we haven't necessarily seen any forward progress with this. We're still left in the lurch with a lot of high tariffs on these countries, and it's not turning into the demand side of things that we'd like to see. Obviously, China being the big one with the lack of demand for soybeans.
What is the fundamentals on November beans for this afternoon? Can we take a look for it?
Yeah, so the soybean situation as you go into first notice for November this week is positive. The market market has taken these notes from President Trump and the notes from the Treasury Secretary and said, you know what, this is as close as we've gotten to a deal. This is, if you go back to 2018 and 2019, this is kind of the equivalent of what we'd heard for essentially a year and a half, which was trade talks are going well. The problem that I have with this is just that you see the market go and spike, and then it retreats and it finishes, 10 to 12 cents, maybe 15 cents off the highs. That's a really tough situation for a market that is supposedly getting the trade deal that is wanted for very, very many months, and we still have a zero when it comes to exports to China at this point.
What is going on with the biofuels blend? We talked about it over the summer. We encouraged the grains markets. However, what happened to it?
Yeah, we're on hold. So if you look at the ethanol side of things, you talk about the corn side of things. Everybody has this idea that we should be going to a full year ethanol blend, and it's been put on hold. You got to start to look at the bean side of things, you start to talk about biodiesel. And while we've increased our crush and we continue to increase our crush, we've brought new crush plants online, and we've upgraded previous plants. We're not seeing necessarily that demand come in droves like it should. Now, I don't know if it's because we're just not at that point of ready to see that take off. I know originally I was hearing 2027, 2028 was when some of these biodiesel contracts were going to really take off. But it is something that it's one of those, when you have problems the way that we do when it comes to like Chinese demand, you almost instinctively want to look to another area and say, why can't we get this going faster so that we don't have this backup of soybeans like we do currently, because that demand center for soybeans, as far as exports, has been lower for mainly the past year and a half to 2 years now.
Do you recommend for the premium risk on the cattle markets with Argentina beef?
Well, I think the cattle market in general is very difficult right now. So we went from a very overvalued situation. You can give supply reasons to see higher trade, higher prices and whatnot, but we got to a point where we were overvalued. Well, in a short, let's say 8 trading sessions, we've now gone from overvalued to undervalued. And all of this, and this, it's a similar situation to what we see in the soybean market, where a headline can change everything, even though it hasn't turned into actual demand or actually filling the void. So if you're buying Argentine beef, or you're going to get a deal done with Brazil to alleviate that 50% tariff and go back and continue to buy Brazil beef, one of the things you have to remember is that those numbers, especially from Argentina, are not going to fill the void of what we're down from the year before. So if you look at beef production here in the United States, we're down 1.1 billion pounds from last year. And if you kind of do some kind of fast math and extrapolate some of the numbers from Argentina, we're really only talking about maybe 175 to maybe 250 million pounds of Argentine beef. And that's just to say what we could bring in over maybe the next year. And if you look at the way that the USDA has set up for beef production for next year, we're already talking about being down 336 million pounds right out of the gates. So these numbers from Argentina that we're hearing, they're not going to fill the void. It's only going to be a Band-Aid at this point. It's not going to necessarily change the fact that we're still a little bit deficient when it comes to beef in the freezer.
What is the floor prices for right now and the end of the month, Greg?
So as you go into the end of the month, you're trading about $11 on soybeans. You went through and filled a gap on corn at 4.32 3/4. You made it to within about 4 cents, 3 to 4 cents of 4.40. On the cattle, you've seen, like I said, on the feeder cattle, you've seen about a $60 washout over the last 8 sessions. We are talking about some prices that are kind of at bargain basement prices if we're going to defend, say, the uptrend, the long-term uptrend. Now, I think we've seen some damage to the charts, but I wouldn't be surprised if you could see, say, the feeder market make a move back to 355 or 360. I don't think it has to go and make new all-time highs again, but it definitely should see some snapback or some recovery. When it comes to the grain side of things, the corn and the beans and maybe even the wheat, the big thing will be what happens with this meeting between Xi and Trump. Because because I believe that if you don't get a deal signed and you don't start to hear some legitimate numbers as far as what could be for soybean or corn or wheat demand out of that deal, I have a feeling we're going to see this market retreat. And I don't know if it'll give back all 90 cents or 85 cents that the beans got, but I think it definitely could be a pretty deep cut as we go into the end of the month or even the beginning of next month.
Wait and see.
Yes, sir.
What is your final thoughts about the fundamentals from trade?
Well, I think right now with the government still being shut down, and as far as we know, we don't have a path to reopening just yet. So we could last another 2 weeks, 3 weeks. Shoot, we could last another month. I think the big thing that is happening right now when it comes to fundamentals is we're being led around by headline trades, and a lot of times it's just like in the first Trump administration, we're being led around by the things that he says rather than actual sound fundamentals of supply and demand. So the big thing that we have to be watching for, and you kind of have to keep your head on a swivel with, is what did he say and what's the underlying tone to it? We had multiple times last week where, we're going to meet with China and it's going to be this, and we're going to have a lot to discuss, and I think we'll get a deal done. But then the very next thing he says is, we may not meet with China, and we're going to put 150% tariff on them. So there's some back and forth type situations here, and a lot of times it's not necessarily healthy fundamentals that are driving the markets. But for right now, it's been very good to have these because it's helped the farmer with some opportunities to maybe sell some cash on this very good soybean rally, even if it's not built on anything long-standing.
Thanks, Greg.
Thank you,
I
Caesar.
enjoyed our conversation for today.
I appreciate the opportunity to be on your show. Thank you.
Greg Mcbride from Allendale Inc. for this week on the Market Club podcast.